what you make of these markets as we move deeper into 2018. Joining us this morning, Wells Fargo chief economist John Silvia. John, good to see you this morning.
Good to see you.
It seemed you hear from all of these CEOs and see what these major corporations are doing in terms of spending plans, in terms of hiking their minimum wages, and, the bonuses that more than 2 million people are going to get. Did people wildly underestimate the almost immediate impact of that tax reform on the economy? Yeah,
because oftentimes, as John will say, the tax programs are oftentimes delayed in implementation. That was true for Reagan. That was true for George Bush's plans. This came out immediately, that you could deduct right away some of the expenses, and also that income to the workers showed up right away and is going to show up in February in their income.
So you don't think, I guess the question is, how much more room does this market have to run? Because it seems unstoppable at this point.
Well, let's build upon John's point with respect to rural banks.
Which we were talking about in the break, by the way. The viewers didn't hear that conversation.
But Mike Mayo, our bank analyst, says, one, right off the top, banks have a lower tax rate. So earnings go up. But if the economic growth picks up, as John was mentioning earlier, then your expected return in terms of lending goes up. So lending can improve, both because of the income and the lower cost of capital for banks. And that'll help the rural lending that John was talking about.
John, how about the long-run economic outlook? The General and I, we're talking about whether this tax overhaul, A, pays for itself, and whether in the long run we're going to see productivity growth and labor force participation picking up in a way that lifts overall economic output beyond just the next year or two. Do you see that happening?
Well, the challenge, and I did listen to your earlier conversation with the General, and the point being is productivity. When we look at capital goods orders, which have picked up over the last 6 months, will that additional capital plus workers mean higher productivity level? So right now we're looking at 2.75% to 3% for GDP for 2018, but 2019 it's 2.5%. So we see some gain, but not a lot of momentum.
That's still better than what we've had for the last
better than what we've had for the last 5 years.
Do you see that being sustained? Can we keep going at 2.5%?
We can keep going at 2.5%. We've got to get better labor force participation. Again, when we're looking at lower tax rates for a lot of workers and bonuses, you're going to bring in some additional workers. Also, you're going to have workers find that, well, with more income, maybe I can improve my skills because now I get rewarded for better skills.
Well, and I know that you're an economist, John, and not a market strategist, but you look at this run in the markets. The S&P, in terms of the gain, it's more than, quadrupled during this bull market run. This is the best bull market the S&P has had since in the post-war era. It's even better than the bull market in the 90s. Can this market keep going?
Well, it can keep going at 2.5% economic growth. You could see, once again, that whole template of companies offering bonuses, increasing minimum wage. That's the American consumer. American consumer is about two-thirds of overall GDP. So, yes, it can be sustained going forward. I don't see any shocks, and we have a model for recession. We don't see a recession next 6 to 9 months, at least.
I was just going to quickly ask, is the American consumer heavily participating in this stock market rally?
I think, again, going back to the subtle IRAs, 401ks, it's showing up in people's statements over the last year or so. I think when people look at those statements and actually pay attention to them, they realize they are, on average, wealthy. And this is for everyone, not just, quote, the rich, but this is the school teachers, the average worker in the government.
People, Republican and Democrat, always want to come up to me and tell me how much their 401k balance has gone up.
Absolutely.
I get that all the time.
Do you buy stocks at these levels? It's expensive.
It is.
Well, we see wages
the bonds are
going
more
up as the unemployment rate continues to go down.
You know, it's interesting. What we're seeing is total compensation going up. What's happening, a lot of workers realize that wages are taxed, but their benefits are not. So they're going to fight like heck to keep their health care benefits, their pension benefits, their workman's compensation, all those extra benefits. They're not being taxed. So, yes, total compensation is moving up.
John Silvia. It was great to see you.
Thank you.
Thank you so much. That's an incredible insight. Thank you for being here this morning.